you're scrolling on your phone, looking for houses. That's everybody does that. And you find a house that meets all the boxes, that checks all the boxes that you want. But you're not pre-approved. You never talk to a lender. So if you skip this step, you can lose the house of your dreams, the house that you really want. Let's talk about the pre-approval process. Remember, I am a real estate agent in Lincoln, Nebraska. I am not a lender, but I do have a lot of information about the lending process. I have done this a lot, and I've seen with the lenders, and I have a good connection with several lenders. So they explain to me, okay, this might work, this doesn't work. And I've seen my clients getting answers from the lenders or situations. So I know enough that I can tell you about the process, but I don't have details. So bear with me. I just want you to be prepared. I want you find a lender that you want. If you want suggestions, you could ask your real estate agent. We know which ones are good. I know which ones we try to stay away from. There's other clients that they would like just to go with the person that they know, or with a bank that they know, that they already have an account with them. What are the documents that they usually are gonna ask you? But 30 days pay stub if you are working for a company, or if you're self-employed and you have your own business, they will ask you for your income tax. So they are also gonna ask you for your W-2s for the last 2 years, probably, or a year. They are gonna ask you for your bank accounts. If you have checking or savings, they just wanna make sure or how much money you have for your down payment, and if you're gonna be able to afford the closing cost and down payment. They will ask you for your ID, so driver license, any kind of ID. What are they gonna check? What the lender is gonna see? The lender is gonna see your income. They're gonna ask to check your credit history, your access to your credit history. And your credit, they're gonna be able to see what's your debt. So they're gonna do an income debt ratio. They're gonna see what's your credit score. They are also gonna ask you for your employment history. Sometimes people get confused and thinks that if you didn't work for a couple of months, or if you move from one place to another, like from another state, and you didn't work for a couple of months, that then you're not gonna qualify and you have to wait. I heard from several lenders that, they can be without work, like they can have a gap between jobs of 4 or 6 months. So it's just gonna depend on the lender, but you can have a gap between employment. So one of my recommendations of what not to do when you are either thinking of buying a house or starting to the process of the pre-approval and getting everything, all your things figured out, do not open several credit cards or increase your balance on your credit card. If do not increase your credit limit, do not increase your balance on your credit cards. Do not open or close several credit cards. Do not do any consolidation that hurts your credit score. And one of the things that I always say, and I know we want to help people, but if you do not own a house, think about this. Do not co-sign anybody, not your kid, your son, whoever asks you to co-sign for, usually is to get a car. Remember, if they get a truck and you are talking like huge payments on a truck, $700-800 a month on a truck, that debt is considered yours. So unless you cannot prove that you are not paying that debt for 12 months, that debt is going to be considered towards your debt. Please, if you don't own a house, if you do not own a house, do not go sign. I know it sounds mean, but if this is something that you're thinking in a few years, do not do it. And in the pre-approval letter, they're gonna give you what's gonna be your max price in a house. So they usually send you a pre-approval letter. Sometimes if I have a connection with a lender, they will send it to me as well. Or you can request the lender to share that pre-approval letter to the real estate agent. So because when we send an offer, we need to send it with the pre-approval letter, which is like the proof of funds for a seller. But let's say you find a house that is really like hitting your max price. It is always recommended, or sometimes lenders will tell you, if you find a house, send me the house, tell me which house it is. And especially if they say that, is because they know that your income and debt ratio is pretty close to the maximum. So they want to make sure that you will be able to qualify. Because even if that house is in your price range, but it's right there on the top, even if it's in your price range, it can change your monthly payments because of the insurance, if you have to pay extra insurance like flood insurance, or if the real estate taxes are a little bit higher in that area, then that is gonna throw off your monthly payment. So hope this tips will help you to either start looking for all your paperwork, start gathering all your information and documents so you're ready to go, and also start looking for lenders. You do not stick with just one lender. You can ask for different lenders. There's lenders that have different kind of products. They can offer you different kind of loans or different services that they will help you with down payment, that they will help you with, closing fees, grants, different kind of things. So shop around, just like real estate agents. Shop around who's gonna give you the best services, who's gonna give you the best products, and don't be afraid, because if they run your credit more than once a month, the credit bureau, they know that the credit they're running is for a mortgage. So they allowed for a month to at least run 3 times. If this helped you, don't stop just right here. Subscribe to my channel and learn more with me.